YouTube, Untamed here. The housing market crash is upon us, and it's happening quite quickly. In today's video, I'm going to talk through some staggering stats, facts, and figures that paint a very clear picture as to where we are at as a housing market across the country and what we can expect moving into 2026. So stick with me as we talk through it all. For starters, why should you take it from me? You've likely seen my other YouTube channels where I talk through car market analysis. I follow the auto industry quite closely, and well, I also follow the housing market quite closely. I'm a licensed real estate agent here in the state of Wyoming, and no, before we even begin this, I'm not going to be hyping up why you should buy, and you should reach out to me to buy your house. I'm not here to do that. I just want to educate you on what the housing market looks like across the country and why. I also do hold a PhD in industrial and organizational psychology. I love seeing how industry impacts the economy at large, and ultimately, what we're able to afford when it comes to the housing market. So stick with me as we talk through it. Paint a picture for you. Right now within the United States, there is about 1.1 million listings, 1.1 million houses for sale currently. That is up 15% year over year. This time last year, 15% less, roughly. According to Redfin, right now, there's 36.8% more sellers than buyers. That right there kind of paints the clearest picture for you. So many people are trying to sell their house, but there's just not enough people trying to buy. That is the highest since Redfin has ever done their reporting. Since 2014, that's the highest that they've seen, that gap, that deviation there. Let that sink in. In fact, we haven't seen such low demand since the late 1990s within the United States. Right now, we are about 30% low on the number of mortgage applications needed in order for there to be technically a level housing market. So, demand is low, supply is high. It's a buyer's market for a couple of reasons. Obviously, price tags in many parts of the country have come down over recent years. Compared to 2021 and 2022, your ability to go into a house and make an offer and actually begin the negotiation process and be a little bit more wishful with your requests and actually successful with those requests is much higher right now compared to just a few years ago. Not to mention, interest rates have come down just a little bit, not a lot, of course, but enough to make a little bit of a difference compared to that time. So if you are in a position where you can afford current prices, it is a buyer's market for you. You can be choosy. Buying conditions will only get better over the next couple of years. I'm confident in saying that. Or better or worse, depending on who I'm talking to here. But your ability to buy a house should get easier with time passing by. Patience will prove to your benefit. I can confidently tell you, year over year, we've seen on average a 1.2% increase in home values across the country. That's technically a loss if you're a current homeowner. And let me explain, with inflation considered and wage growth considered, it's technically a loss, probably 4 to 5% loss in your home value when you consider those factors. Places within the United States are seeing a decline in prices. Zillow reported 53% of all houses currently listed are showing a decline in their Zestimate. Now, Zestimate is kind of a hard value to trust in and of itself. Zillow claims that they have a 1.8% deviation when it comes to their error reporting on current active listings within Zillow, and about a 7% error allowance on listings that are not currently active. So that's what the grace that they give themselves, but I think it's much greater than that in my personal opinion. But even they are reporting 53% of all houses have shown a downward decline in value. Generally speaking, the Northeast and the Midwest are still seeing home values increase, more so in the Midwest. And when you look into the details of it, it's quite fascinating because the vast majority, I'm talking 88% of all mortgages that are applied for within the Midwest, they're from outsiders coming in. So it's not locals who are born and raised in the Midwest driving up the price tags. It's people moving in from California, moving in from Florida, moving in from these places where their values of their houses are higher. And comparatively speaking, the Midwest homes are much, much cheaper. So they're arriving with a few more coins in their pocket, driving up the price tags in the Midwest. And that's similar to what we saw throughout the pandemic, right? A lot of people were getting remote work capabilities from their companies, and they were moving in from these major cities into these more rural or even suburban areas away from the city. Moving away from San Francisco, moving from San Diego, moving away from Silicon Valley to these locations where, man, their money went much further compared to where they're leaving, of course. So that drove a part of the inflated price tags across the country in and of itself, not to mention hyperinflation, right? The super low interest rates are practically giving away home loans to people. If you made macaroni art for a living, you got pre-approved for $1 million house. So it seemed, right? Pretty silly. Speaking of the pandemic, I think it's worth noting that a lot of Americans feel shackled to their current home loan. And what I mean by that is they went out and received a 2.5% interest rate on their mortgage during that time. And well, they're afraid to leave it. With current rates being between 6 and 7% still on average, they don't want to leave that amazing rate. And you can't say you blame them, right? But that is a big part of the problem, why so many buyers are still sitting on the sidelines, because they are just waiting for those rates to come down a bit more. Still, within the United States, over half of all home loans out there have an interest rate of 4% or less. Over half of all the loans out there. So again, those people with those loans, with those rates, they're not interested in coming out and spiking up their rate 2% or more. You can't blame them. This is why this next point here is so crucial. Fannie Mae and Freddie Mac, the two government-backed entities that secure over half of all U.S. mortgages, they are currently in talks with the current administration and officials to determine if we have a few possibilities that lie ahead. Number one being assumable loans. Number two being portable mortgages. Number three being 50-year mortgages. Let's start with the assumable loans. As it sounds, if there is a house for sale and that person happens to have a 2.5% interest rate on that loan currently on that house, there's a possibility for you, the buyer, to assume that loan. That's always been a possibility for VA loans. We all have heard that, I'm sure. But even then, there's a lot of nuance to it. And there will likely be a lot of nuance to it just if they opened up the floodgate to all loans. The portable mortgages, that's even more interesting. Portable mortgages is you taking your current interest rate on your current home loan and taking it to your next house. Again, there's some fine line print that you need to be reading through to fully understand that. We could talk through that in a future video, but that would then open up another floodgate of people interested in buying a new house. Then 50-year mortgages, well, pretty self-explanatory. You'll be paying off that house till the day you die. But is paying off a house till the day you die much easier if that payment did come down substantially, which it would, of course, compared to a 30-year loan. We'll wrap up the video there, guys. I do firmly believe that we are witnessing the beginning of a quiet housing market crash, and it will get worse as we teeter deeper into 2026. I'm confident in saying that. The number of sellers that continuously rises month after month, substantially reaching record high levels, all while the number of buyers stays pretty stagnant or comes down a little bit. When you combine that with the fact that we're seeing record levels of foreclosures take place and continuous growth in foreclosures, well, that's a recipe for disaster. That is a recipe for a housing market crash. Let me know what you're seeing in your local area. Are houses sitting for sale several months on end, a year plus, or are they flying off the shelf? Let me know what you're seeing. And let me know if you appreciate this type of content. Obviously, haven't really provided this on this channel just yet, but I want to see if you guys appreciate it. Let me know in the comment section. And as always, thanks for taking the time to tune in. Till next time.